Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Few days back, I was seeing an interview of Morgan Housel on CNBC. Now, an interesting theory that he put forward in the interview was that markets are narrative driven. The valuations of the company are often a multiple of their numbers today into the story about their future. Now, if the story looks good, yes, the valuations are going to be good. If the story does not look promising, it is going to affect their valuations. Isn't it true? While deciding on the company, we check for news. What is the news about the company? What does the future hold for the company? Does the future prospects look bright? Or are there any news which are not so good about the company, its promoters, management, so on and so forth? It affects our investing decision. So today I thought of checking about the story of Hindalco. Why Hindalco? Now, Jeffries, which is a very well known brokerage and investment advisory firm in India, has given a buy recommendation for metal stocks. Tata Steel, Hindalco were a few stocks that they had mentioned in their report. What they said is these stocks were relatively stable amidst the broader correction that we have seen in the equity markets. So today we will check Hindalco. What does the story about Hindalco look like? Is it promising? Is it worth investing? Is going to be the topic of our today's video. Hindalco is part of the Aditya Birla Group, which has history dating 19th century. The group was founded by Seth Shiv Narayan Birla, and the group played a key role in India's industrialization with presence in textile, cement, aluminium, and more. Today, the group has over 40 companies, has a turnover of more than $60 billion, and employs upwards of 120,000 people globally. Uh, Kumar Mangalam Birla, the current chairman, was instrumental in expanding the group beyond Indian borders. Now, the next generation, the children of Kumar Mangalam Birla, have also joined the business to ensure continuity and growth. All of us have heard of Ananya Birla, who was a well known pop singer before shifting to her father's business. Also, Aryaman Birla, who played in IPL from Rajasthan Royals, has also joined his father's business. Hindalco was founded in 1958. It is one of Asia's largest primary producers of aluminium and also a major copper producer. In 2007, Hindalco acquired Novelis, a US based aluminium company. Now, because of this acquisition, it became a global leader in aluminium rolling and recycling. Today, it has operations across India and internationally with a strong presence in the US through Novelis. Trump came into power on January 20th. Now, even before he assumed office, he was talking about retaliatory tariffs on countries which charged heavy duties on US imports. After he assumed office, he spoke about duties on Canadian and Mexican goods. Now, those duties are deferred till April 2nd. That is also the date when tariffs on India come into effect. But with ongoing negotiations between the two sides, uh, it is a wait and watch as to what exactly transpires till April 2nd. As far as China is concerned, Trump has already levied 25% duties on Chinese metals and other products. Though there have been no recorded instances of China dumping steel in India and other Asian markets, Vietnam has put in place anti dumping duties on Chinese imports of steel. And India is also looking at safeguard duties for any oversupply of these metals in India. The import of steel, particularly, has increased to 7-year high and is a cause of concern for domestic manufacturers. Now, with these new tariffs that US has imposed on China, what the Chinese government does is for in countries like India to check and act upon. China, on its part, has also mandated output cuts for metals like steel. Why? Because of the glut, the oversupply of these metals in the market, and to restore profitability of mills. So, these actions are also favorable when it comes to Indian metal manufacturers. Let us concentrate on the financials of Hindalco. Now, the latest quarter results of Hindalco, if we check the results, the sales have grown consistently from 51,994 crores to 58,390 crore rupees. Expenses have also steadily increased from 44,300 to nearly 50,800. Operating profit peaked at 7,883 in the previous quarter but has slightly declined to 7,583 in the latest quarter. The margin has ranged between 12 to 14%, again indicating stable profitability of the company. Now, if you check net profit, now net profit showed some growth, but declined from 3,909 crores to 3,735 crores in its latest quarter. The tax rate has also varied between 23 to 37%. Now, this will affect the net profit margins of the company. Earnings per share has followed a similar trend as the net profit, peaking at 17.39 before dropping to 16.62 in the most recent quarter. Now, overall, it's the results show a slight pressure on profitability, but stable revenue growth of the company. Going through the profit and loss statement of Hindalco, the sales have slightly decreased from March 2023 figures. From 2,23,000 crores in March 2023, they came down to 2,15,000 crores in March 2024, but they are projected for a healthy increase to 2,29,000 crore rupees in the trailing 12 months period. Expenses have reduced from March 2023 from 2 lakh crores, they came down to 1 lakh 92,000 crores in March 2024. Now they are expected to further decline to 1 lakh 99,000 crore rupees by for the 12 months trailing period. Operating profit has improved consistently from March 2023, where it was nearly 22,600 crores, to 23,800 in March 2024, and it is expected to significantly rise to nearly 29,649 crore rupees for the trailing 12 months period. Net profit rose from 10,000 crores in March 2023 to 10,155 crores in March 2024, with a significant increase expected for the trailing 12 months period to reach 13,892 crore rupees. Earnings per share have also slightly increased from 44.93 in March 23 to 45.19 in March 2024, and it is expected to reach 61.81 for the trailing 12 months. Dividend payout also has increased by nearly 1% in comparison to the March 2023 figures. Focusing our attention on the balance sheet now, reserves have steadily increased from nearly 94,500 crores in March 2023 to 1,05,900 crores in March 2024, and increasing further to reach 1,14,900 crores in the September 2024 quarter. Borrowings decreased, though slightly, from 60,291 in March 2023 to 56,356 crores in March 2024, but they rose again to 60,959 crores by September 2024. Capital work in progress rose significantly from 7,700 crore rupees in March 2023 to 22,341 crores by September 2024. Now, what does the balance sheet suggest? Now, it suggests that the company's reserves and investments are growing steadily. Borrowings have fluctuated, but they remain under control, and there has been a significant growth in the capital work in progress. Now, this suggests ongoing expansion or new projects undertaken by the company. Looking at the fundamentals of the company boasts of a market capital of 1,57,000 crore rupees, which is a large cap company, right? Earnings per share stands at a healthy 45.65 rupees per share. Now, PE ratio is recorded at 11.05, which is lower than the industry average of 12.16. This indicates that the stock is undervalued in comparison to its peers. Now, book value per share is at 512.54. What does book value per share indicate? What is book value? Assets, total assets minus total liabilities of the company. So, after paying off all the liabilities, what is the amount that remains for the shareholders? So, for each share, the amount that they will get is 512 rupees, 0.54 rupees per share. Price to book value is the price people are ready to pay for the book value of the company, which stands at 1.44. Now, a lower PB ratio suggests that the stock is reasonably priced in comparison to its assets. Long term DE, debt to equity, stands at 0.57. So, a low debt to equity is healthy and suggests that the company has manageable debt levels and indicates financial stability of the company. Return on equity is 10.10%, which shows company generates 10.10% return on the shareholders equity, which is moderate. Dividend yield is at 0.5. The dividend payout is relatively low, suggesting that the company reinvests most of its earnings for its growth. What is the bigger picture? What does the industry growth look like in the future? Now, globally, aluminium market is projected to grow at a CAGR of 3.5% for the next 5 years, which is driven by demand in sectors like electric vehicles, renewable energy, and so on. In India, the market is expected to grow at a CAGR of 7.6% from 2024 to 2030, increasing from $11.28 billion dollars in 2023 to nearly $19.76 billion dollars by 2030. Now, this growth is fueled basically by the ongoing infrastructural development in the country, its focus on renewable energy and urbanization efforts. How does Hindalco stand against its competitors? Now, analyzing the top three aluminium producers in the country: Hindalco, Vedanta, and NALCO. So, NALCO is a government company, right? The market cap of Hindalco is 1,57,000. That of Vedanta is around 1,33,000, and NALCO is around 40,000 crores. I'm talking about crores of rupees, right? The PE ratio of Hindalco is 11.05. We saw that it is below the industry average. That of Vedanta is 13 and that of NALCO is 8. Dividend yield is lower for Hindalco in comparison to its competitors. It is just 0.5%, whereas for Vedanta and NALCO, it stands at a good 6%. Debt to equity for Hindalco is 0.57, higher in case of Vedanta, and it is lower in case of NALCO. Return on equity also, Hindalco averages out at 10.10%, whereas Vedanta has a higher return on equity at 12% and NALCO stands at 8%. Now, Hindalco has a balanced debt to equity ratio compared to Vedanta and NALCO. It indicates better leverage management. Its global presence with Novelis gives it a competitive edge in downstream aluminium products like beverage cans and automotive applications. Now, Ultratech, another group company of the Aditya Birla Group, some days back announced its entry in the wires and cables business. Now, aluminium is a major component of wires that are needed in electrical appliances, right? Within the group, Hindalco has good prospects of orders from this new company that Ultratech plans to form, but the production is going to start not before 2028, with efficient production to be achieved only by 2030-31. So it is a long way through, and how the synergies match, only time will tell. Well, in the words of Morgan Housel, what he said is valuation is a multiple of today's numbers with future stories. So, what does the future look like for Hindalco? Is there any prospect in that story? Well, currently, Hindalco is one of the major suppliers to automotive manufacturers like Tata Motors and Mahindra, where it supplies lightweight automotive products to these companies. Aluminium is also getting increasingly used in electric vehicles for lightweighting purposes. Now, India has an ambitious plan to achieve 30% of EV adoption by 2030. The annual EV sales in India are projected to reach nearly 191 lakh units by 2030. Now, globally, also many countries have ambitious plans when it comes to adoption of EV. So, yes, this growth story has good prospects. Secondly, infrastructure and construction companies also use aluminium in a big way. Now, Hindalco provides aluminium for infrastructural projects. Now, a known project that wherein Hindalco was involved was the Mumbai Coastal Road projects. Why aluminium is used for infrastructural development is because of its strength to weight ratio and durability, making it a preferred material in construction. Now, when you see the infrastructure industry, India plans to invest nearly $2.2 trillion in infrastructure development by 2030, doubling of infrastructure spending from 1 lakh for 143 lakh crore rupees between fiscal years 2024 to 2030. Again, massive prospects in this industry. Next, electric industry. Now, Hindalco supplies aluminium conductors and components to state electricity boards in India, playing a critical role in power sector. If you see the growth prospects of the electrical industry, India aims to become a 7 trillion economy by 2030. It requires significant electrical infrastructure development. Now, all these are positives when it comes to a company like Hindalco. Packaging sector. Now, Hindalco is a significant supplier of beverage can to supply a supplier to beverage can producers, leveraging its downstream capabilities through Novelis in the US. The global aluminium packaging market was valued at 123 billion in 2022, and it continues to grow with sustainable trends. One more industry which has amazing future prospects and where aluminium is majorly used is solar panels and renewable energy. Now, India targets 500 gigawatts of non fossil energy capacity by 2030. Solar energy is expected to account for nearly 55% of India's total renewable energy capacity. Now, can you see the mammoth prospects that this industry has, and the use of aluminium in this industry, and the kind of orders companies like Hindalco and other aluminium manufacturers should expect from this growing sector? Now, aerospace is also a sector where India is projected to become the world's third largest aviation market by 2030. Aerospace experts from India target an increase of tenfold in the next decade. Also, an industry where aluminium is majorly a major component. So today's numbers are healthy. The future story is quite ambitious, very positive. So, what do you think? Would you invest in Hindalco at this stage? And what are your thoughts about this video? Have I missed any point? Please comment and let me know. And let it be a healthy discussion about the company before you decide whether it is an investable company or not. As always, it is very, very important that you do your own research, consult a financial advisor to align your investment decisions with your financial goals. Please check into your risk taking ability, and like my video, share and subscribe to my channel for more such informative content. Until next time, stay safe and happy investing.